the volatility is here to stay, and we're going to receive a lot of news flows, a lot of like more stabilization flows, or on the other hand, a lot of trade frictions announcements. So unfortunately, these are not areas where we can be efficient. We don't have an edge in predicting this. That said, what to us is most important to focus on is really to understand truly the corporate fundamentals of those companies, and trying to see basically what are the opportunities that could potentially be a bit more insulated from those trade uncertainties. And that is why we have been probably focusing even more these past few months on the more domestically driven stories, because there are plenty to do with it. There are plenty of opportunities, but you have to be selective in this space and trying to look for the names that can do well regardless of those external factors. Obviously, this is not something that we can completely ignore. It will have at some point some impact on certain sectors, but where we will see differentiation is among the companies that will continue to do well because they have strong pricing power, strong balance sheet, strong fundamentals. That is the type of quality names that we are looking for, despite all those trade uncertainties.
Yeah, I think the point is well made here. Whether or not the tariffs are blocked right now, they might become unblocked later. So, you just have to try and sort of mitigate the risk here, because the tariff impacts have different impacts on different companies, different sectors, and different markets as well. I mean, ASEAN is one of those markets that they say could be quite affected by tariffs. Particularly, would it be affected not just in terms of exports, but also in terms of foreign direct investment, because uncertainty means that companies put investment plans on hold?
Indeed, when we look at certain regions like the ASEAN region, it tends to benefit from those FDI flows. But indeed, there's recent trade tariff uncertainties has been quite challenging for the FDI flows. That said, some regions, so especially the ASEAN region, has benefited from a couple of positive factors, such as the lower oil prices, more favorable commodity prices, but also the lower global interest rates. And so we think that a number of economies, especially the ones that are probably more domestically focused, should benefit from it. One major example is the Philippines, where we have found new opportunities in this space, especially in the financial space, given that the lower interest rate is helping a number of names. Also, the more favorable commodity prices also help those economies which are known to be big importers. Once again, the Philippines is definitely a good example. So once again, we try to really look at those names that are kind of probably more insulated from those trade tensions, and we think that in Asia there are clearly a number of opportunities to be found.